Hey everyone, and welcome back to the channel. Today, we're diving into a company you might not know by name, but whose technology is probably in your pocket right now. ARM Holdings, ticker ARM. We're breaking down their fascinating business model, a huge recent shift, and what it all means for the future of tech and for investors. Section 1. ARM's original blueprint for success, visual, on-screen text. ARM Holdings, the brains behind the chips. Visual, simple animation, a blueprint or circuit design, then showing it powering a smartphone. For decades, ARM wasn't a chip maker, they were a chip designer. Think of them like the architect for microprocessors. They created the highly efficient blueprints, known as intellectual property, or IP, and then licensed these designs to giant tech companies like Apple, Samsung, and Qualcomm. These companies would then take ARM's designs and build the actual physical chips. Visual, flowchart. Old model, ARM, IP licensor, fixed fees plus royalties other companies build chips. Their business model was brilliant. Two main ways they made money. First, a fixed upfront fee, usually a few $1,000,000, to get the blueprint. Second, and this is key, a small royalty, about 1% to 2%, on every single chip sold they used their design. Because they didn't have to build expensive factories, their profit margins were incredibly high, almost 97.5%. That's like selling a recipe for a cake without ever having to bake it yourself. Section 2. The game-changing pivot. ARM becomes a chip seller. Visual, on-screen text. A bold new direction. ARM sells its own chips. Visual, image. A server rack or a sleek, futuristic CPU chip. But hold on to your hats, because ARM just made a massive pivot. At their ARM Everywhere event in March 2026, they unveiled something completely new. Their own physical, production-ready server processor called the AGI CPU. This chip, built on advanced 3-nanometer technology by TSMC, isn't just a design. It's a product ARM is selling directly to customers. Visual, flowchart. New model, ARM, chip supplier, AGI CPU direct sales to customers. Visual, logos of Meta, OpenAI, Cloudflare, etc., appearing around the AGI CPU. This is a huge shift. ARM is transitioning from being just a blueprint provider to also being a direct chip supplier. And who's buying? Big names like Meta Platforms, OpenAI, and Cloudflare are already committing to use these chips for cutting-edge AI workloads. Visual, comparison table. Old margin, 97.5% IP licensing, versus new margin, 50% direct chip sales. Now, selling physical chips means lower percentage profit margins, around 50% instead of 97.5%. But here's the kicker. The absolute dollar profit per chip is much, much higher. This pivot expands ARM's potential market from a $3 billion royalty pool to a massive $100 billion AI server CPU market. Their CEO projects this new chip business will generate $15 billion in annual revenue by 2031, pushing total company revenue to $25 billion, a six-fold increase from 2026. Section 3. ARM vs. Intel. A tale of two giants, visual, on-screen text. ARM vs. Intel. Different paths to future tech. Visual, split screen, ARM logo with upward trending graph, Intel logo with downward trending graph. To put ARM's journey into perspective, let's compare them to their long-standing rival, Intel. ARM has seen strong growth, driven by its efficient designs in mobile, cloud, and AI. Their revenue grew over 16% annually in recent years. Intel, on the other hand, has seen its revenue decline, grappling with the massive costs of building new chip factories and restructuring its business. Visual, bar chart comparing ARM's revenue CAGR, 16.15% versus Intel's revenue CAGR, minus 3.91%. Their approaches to capital are also miles apart. ARM, in growth mode, reinvests all its cash back into research and development, not paying any dividends. Intel, facing financial pressures from its expensive factory build-outs, actually cut its dividend payments significantly in 2024. This highlights ARM's agile, high-growth strategy versus Intel's asset-heavy, turnaround focus. Section 4. ARM's expanding empire, where their chips dominate, visual, on-screen text. ARM everywhere, from your phone to the cloud. Visual, world map or infographic highlighting different tech segments. ARM's architecture is already everywhere, and it's rapidly expanding. Smartphones. They have a near monopoly, powering 99% of all smartphones. Laptops/PCs. They're making huge inroads here, now at about 30% market share, thanks to Apple's M-series chips, and new chips from Qualcomm and even NVIDIA. Automotive. A strong leader, found in 40 to 45% of vehicle infotainment and ADAS systems. Data centers and AI servers. This is the big growth story. While only around 10 to 12% today, ARM-based chips are projected to make up to 90% of custom AI server CPUs by 2029. Companies like AWS and Microsoft are already using custom ARM chips. Section 5. What's hot and what's not. Key developments and risks. Visual, on-screen text. The roller coaster ride, catalysts and headwinds. Visual, split screen. Left side, green checkmark, good news, right side, red X, challenges. So what's been happening recently? Good news. NVIDIA RTX Spark. NVIDIA just announced a new AI PC processor using ARM's architecture, a massive validation for ARM in consumer AI. ARM stock jumped 18% on this news. Now for the challenges. FTC antitrust probe. Regulators are investigating if ARM is leveraging its dominant licensing position to unfairly push its new physical chips, potentially hurting other chipmakers. This caused an 8% drop in stock price. The neutrality paradox. By selling its own chips, ARM now competes directly with its customers like Qualcomm and Amazon. This could push some partners towards alternative open-source architectures like RISC-V to reduce dependency on ARM supply chain risks. Moving into physical manufacturing means dealing with logistics. A recent 18-day strike at Samsung, a key supplier, highlighted potential vulnerabilities. ARM itself has faced constraints in meeting demand for its new chips. Insider selling. Some ARM executives have recently sold shares, which can sometimes put short-term pressure on the stock. Customer and geopolitical concentration. ARM relies heavily on a few big customers and has significant exposure to China, making it sensitive to trade tensions. Section 6. The bottom line. What this means for investors. Visual, on-screen text. The investor's choice, growth versus value. Visual, side-by-side comparison. ARM, growth profile, versus Intel, value/turnaround profile. So what's the takeaway? ARM and Intel represent very different investment philosophies right now. ARM Holdings. This is a premium growth asset. It's riding the wave of AI and a structural shift in computing, expanding into high-value server chips. It has high margins and a clean balance sheet, but also a very high valuation, meaning it's expensive, and is sensitive to short-term news and regulatory risks. It's for growth-oriented, long-term investors comfortable with volatility. Intel Corporation. This is more of a value or turnaround play. It's betting big on building out its manufacturing capacity, and is priced much lower, but it's facing significant challenges, including declining market share and ongoing losses as it invests heavily. It's for value-oriented investors focused on potential cyclical recoveries who are patient. ARM is evolving from a quiet, high-margin IP giant to a direct player in the booming AI chip market. It's a fascinating story with incredible potential, but also new complexities and risks. Visual, on-screen text. What do you think about ARM's big pivot? Let us know in the comments. What do you think about ARM's big move? Is it a brilliant strategy, or are the risks too high? Let us know in the comments below. Don't forget to like this video and subscribe for more deep dives into the world of finance. Thanks for watching, and we'll see you next time.